Cool. So yeah, thank you guys who are here and have tuned in. Hopefully a few more will join us during the half an hour. And I just started recording this on my computer, so we have this in our Knowledge Drop archive forever. But yeah, thanks again for being here. This is, I think, if I have the numbers right, this is our 12th Knowledge Drop ever. So we're still kind of growing out the idea. And if any of you guys out there or anybody that watches this video has an idea to do a Knowledge Drop at some point, feel free to drop me a line on Slack. I'm Travis. I'm just here to host this thing, but really the star of the show is Jamie, not Dan, Jamie Roach from Meraki. And she's here to talk to you guys about finances. She's sort of a finance guru and helped a lot of people through some of these questions that I think most people have when they're starting, like to either, be self-employed as an expat out there in the world, or trying to start up a small business and do the financial part of that correctly, so they don't have to backtrack and figure it all out once they're already established. So I'll let her explain more, but thanks again for being here. Also, feel free to use the question and answer box throughout the whole chat, so that at the end of it, we can revisit it, and you guys will not have forgotten your questions then, because they're already written into the question and answer box. And we'll get to those hopefully over the last 10 minutes. Cool. All right, Jamie, without further ado, take it away.
Great. Thanks, Travis. I'm going to go ahead and share my screen with everybody.
Perfect. Can you guys tell what country I'm in from my little cute coffee cup? Italia.
Italia. All right, can everybody see the slides? Yes, no, maybe?
Yeah, it's perfect. Oh yeah, you can't, I was thumbs upping you, but you can't see me. So yeah, it's perfect.
Perfect. Okay. Yeah. So, and I can't see the comments either. So Travis, if there are things that come up as I'm talking, let me know. Hi, everybody. I'm Jamie from Meraki, currently in Prague. Kublai, you guys are going to love it. And I'm going to dive right in. So today, just talking a little bit about starting a business or managing the financials of a business while you are an expat or remote. So I'm going to talk about staying legit with the IRS, registrations and those types of things, tips to manage your business expenses, and then some special issues to consider when you're starting and growing a business overseas. Why I'm dropping it, I have been working with new businesses and growth stage startups for about 3 years, and I recently helped a few fellow Merakis sort through some of these issues getting businesses started, so you are going to benefit from some of their lessons. The one thing I do want to mention, the IRS was mentioned in this description. This is kind of a US focus. So this is intended for people who are wanting to start a business in the US. There's been a little bit of chatter on Slack about starting businesses elsewhere. So this is definitely very US specific. So just wanted to throw that out there. So for most people, whether you've already started your business or you're thinking about doing it, accounting, finance, keeping all those things straight, what you need to do with the IRS makes people feel like this. And so my hope is just with a couple of the tips and things we're talking about today that you'll feel a little more like that. So with that said, I'm going to dive in. So the first thing I'm going to talk about is tips for starting your business as a remote. And the first thing is registering your business. So it's definitely possible if you are a single person, a sole proprietor, to operate your business without registering it as a separate entity, like an LLC. But I highly recommend forming an LLC. There really aren't any downsides to doing it, and there are some benefits. It's just helpful to keep everything related to your business separate, and it also legitimizes what you do when customers are writing a check, writing it to the LLC, gives especially a brand new business a little bit of legitimacy. So an LLC is the most basic form of a separate entity for a company that you can form. There are others, but I can't think of any person starting a business that I've recommended that they register as anything other than an LLC. And if you're going to do that, there are two kinds of registrations that you need to do. You need to register with a state and then with the IRS. If there is a home state for you, a state that you're planning on going back to, that you have friends and family in, you should definitely consider registering in that state. But there are some states that are not quite as friendly as far as their business laws and that type of a thing. One that comes to mind is California. There can be a lot of regulations and kind of hoops to jump through in California. So if you don't have a state that immediately comes to mind, or if you want to make sure that you're registering in a state that is as business friendly as possible, Delaware and Florida are both common. Another thing to consider is some states have better online registration processes. For Delaware, unfortunately, while it's one of the most common states for people to register in, the process is a little bit more manual, and there's some filling out of forms and faxing things back and forth that need to happen. So something to consider as well. If you are registering in a state that you are not physically located in, using a registered agent is mostly required. A registered agent is really just a company that you pay $100 a year to, and they are a mailing address in that state so that the state can send official notifications regarding any annual registrations that need to be filed or any other kind of official legal things. For example, if you're registering in Delaware, you need to provide the address of a registered agent, specifically if your mailing address is not in Delaware, but then you also provide a separate mailing address for other items, and that does not have to be in the state of Delaware. So registering with the state, first thing, then registering with the IRS. When you register with the IRS, that's when you get an EIN number, a tax ID number, as a separate entity. This is what the website looks like if you're going on to register with the IRS. They try to make it pretty easy, and you will get your EIN number in your letter that legitimizes your business and gives you your tax ID number immediately upon registering. Both of these registrations are things that you can do yourself if you want to. Follow the steps in the process online. But if it's something that you're not quite comfortable with, or you're afraid that there are some questions that you're not sure you're going to answer them correctly, and you want to make sure that you're dotting all the I's, crossing the T's, there are companies that will help you, do these registrations on your behalf. The other thing I want to talk about when you're starting a business is an operating agreement. So if it's just you, you're a sole proprietor, operating agreements may or may not be essential, but if you are a partner, an operating agreement is essential. And really, it's just a legal document that will lay out the terms of the agreement, who owns what percentages, what happens if the business dissolves, just kind of agreeing to all of these things up front. It's possible to do this online through something like LegalZoom, but I highly recommend finding an attorney that will help you sort through the specific issues if you are starting a business with partners and it's not just one person. The operating agreement is also a must when you're opening your business bank account, which I'm going to talk about in a minute. So, a couple of special issues for remotes or expats. When doing these registrations, at least one partner needs to be a US taxpayer, but only one does. So you certainly can form a business partnership with people that are not US taxpayers, but there are some special issues there as well. And the biggest hurdle or challenge is opening a US business bank account. This is important because you really want to separate the finances for the business from your personal finances, but most banks, especially the big national banks, require an in-person visit. I did a little bit of research online and listed a few banks that may allow remote account creation. As you can tell, I'm not too familiar with these, and I certainly can't vouch for them, but did want to give you guys a few resources to investigate if you are not planning on being back on US soil and need to investigate creating a business bank account remotely. Most of the people that I've worked with try to incorporate it into a visit back home. National banks like US Bank, Bank of America require an in-person visit, and it's really important to check ahead of time what paperwork they are going to require. An operating agreement is one of them, your state registration, and your EIN tax letter from the IRS are all things that they will require. So jumping into people who maybe have already started a business, but you're managing that remote, tracking your finances, your expenses, just having a good idea of where you are. My best recommendation is not to wait until the end of the year. There is a good reason for business owners to know what their finances look like and not just wait to throw everything together in order to get their taxes done. In order to manage your business well, you need to know where things are at. And a cloud-based accounting platform is a really, really great way to do that. Xero is a platform that supports businesses all over the world, and their presence in the US is growing. But the other cloud-based accounting platform that's really popular is QuickBooks Online. So both of those would be great options. Please, 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 no shoeboxes full of receipts, or equally as bad, an electronic data dump where you just put everything electronically somewhere in Dropbox and worry about it at the end of the year. It can be really important to know what's going on with your business finances right now, not just, I think things are okay, or my bank balance is X, so that means things must be going okay. A cloud-based accounting platform can automate the process, make it pretty easy for you, and will avoid all the hassle at the end of the year.
So Jamie, you would recommend that over like somebody just doing their own sort of like spreadsheeting too? Like you think it's really important to have like a tool that does it?
The tools are so low cost. Xero starts at $9 a month. It's for when your spreadsheet gets complicated. The nice thing about some of the tools like Xero and QuickBooks Online is that you can connect your bank account and it will automatically pull in all of your expenses. You can attach the receipt. I say this at the end, but your tax preparer will love you if you have all of this organized, and it's really easy to go back and do some analysis if you're thinking about taking that next level for your business.
And it's the same cost as Spotify, so like why not?
Sorry, what?
It's like it's the exact same price as Spotify, so why not?
Yeah, exactly. Okay, so just a couple more issues specifically for remotes or expats. There are possible additional reporting requirements with the IRS if you are working with non-US customers. So if you are working with, if you're getting a lot of income from customers that are not based in the US, definitely something to investigate the implications more on that. And then I just want to quickly touch on the federal earned income exclusion. Most of us should be somewhat familiar with that, but just in case you're not, it's really sorry, lost my train of thought. Okay, so the federal earned income exclusion basically allows you to reduce your taxable income. So depending on how much you make, you may not have to pay any federal income taxes. But the federal earned income exclusion may not apply if you work for yourself. So it applies to income taxes, but doesn't necessarily typically apply to self-employment tax. So that means that if you are a W-2 employee, your income taxes apply, but self-employment tax does not. This could be its own knowledge drop in and of itself. So just want to put a resource out there. Josh with Expat Tax Professionals is really an expert on a lot of these things, including the two issues I mentioned earlier, and is definitely somebody you should reach out to if you have any specific questions related to both the federal earned income exclusion and anything related to operating a business remotely and getting your taxes done.
Those are the guys I used for my taxes. I feel smart now.
They're connected to Remote Year, and yeah, no reason not to reach out to them. Okay, so just kind of a summary. Do register with the state and the IRS right away. if you make the decision to register. Do hire an expat tax professional, and do work with an attorney, or at the very least, LegalZoom, to develop an operating agreement. Don't commingle funds. So the sooner you get a bank account, the easier it is to keep business expenses in the business bank account and personal expenses separate. That can be really challenging at the end of the year. Don't put off registration and plan to worry about it when you start making money. It's always better to have everything in place. And then don't wait until the end of the year to organize, and certainly don't have a box of receipts like that. So, homework. I have a document that I'm going to be sharing that's just kind of the top 10 tips or steps, things you need to do if you are starting a business from scratch. So I will be sharing that, on Slack, or whatever the most appropriate place to do that is. Definitely register if you haven't, and track your expenses via a cloud software system, and your tax professional will love you. So that's the content I have. This is my contact info. Please feel free to reach out to me if you have a question. I'd be happy to help point you in the right direction, or point you toward some resources if the registration piece is something that you feel like you'd like to have a company do for you. And with that, I think we'll open it up for questions.
Awesome. Yeah, you can jump out of screen share too if you want, Jamie, and we'll get into some question and answer. We already got one from Samantha, but keep them coming, guys. You know, we got Jamie's brain here for the next 10 minutes, so let's use it. First question, though, came in from Samantha from Magellan. She asked, are there any specific expat/RY expenses that could be applied toward deductions? So I'm guessing, yeah, like tax deductible type expenses. Like, yeah, that's a good question.
Yeah, and I've specifically had conversations with people about whether, for example, the money that you pay to remote year is eligible. It's really a gray area, and unfortunately would require separating out the remote year fees, what's for housing versus what's not, and some nuances that probably haven't been addressed or aren't information we have access to. So it's a little shaky for sure. Not a definite yes, not a definite no, but yeah, unfortunately I don't have a great answer for that.
Yeah, I mean, a lot of this is like, you know, we're living in a brave new world, so all of this stuff is kind of just we're first to enter the space, I think, so it's interesting.
Yeah.
Any other questions out there? Keep them coming in. I have one, though, in the meantime. What else? You said, like, if you make a certain amount of money, then maybe you don't fall into the FEIE qualification. What are the other qualifications? I know it's like you need to spend a certain number of days outside of the country during the calendar year. Is that it? Or what are like the main, do you have that? Do you know that stuff, like the main few qualifications?
Yeah, there are a couple of tests that if you meet one of those tests, and the IRS on the documentation about it lays those tests out pretty clearly. So one of those tests, and I think the one that is the easiest for remotes to qualify for, is the 330 days. But there are a few others that are kind of an either or, related to your residence and housing.
But that 330 days is like a hard line. Like if you, okay, because that's like good to know, I guess, for people if they're going to go home for like a wedding, like which day you book your flight in or out might be the difference between being able to apply.
That's important. And the other thing I'll mention that we've talked about with my fellow Meraki's is it's easy to think that it's an end-to-end, like it has to be 12 months, and then if I'm going to keep, for example, traveling after remote year, that it's got to be another 12 months, but it can be a rolling 12 months. So my year ends in December. If I'm going to keep traveling and be out of the country and meet that 330 out of 360 requirement through February or March, and then go home then, I qualify for the exclusion until I no longer meet that 330 rolling day piece, if that makes sense.
Yeah, I did not know that. That's interesting.
Yeah.
Anybody else out there in the knowledge drop land have any questions? Fire away. Well, I don't know. We'll I guess. Oh, here comes one. Samantha again. Thank you, Samantha, for being such an active participant. She says, okay. She said, I appreciate the reply. I did ask RY this back in May 2016 and got this response. Not sure if it's still applicable, but interesting. It says all of your RY bills will be split out into your monthly amount and what we call our global co-working and connectivity costs, which are 300 USD per month. For example, a standard bill would be a remote year monthly fee of 1,700 plus a month of global co-working and connectivity costs of 300 for a total of 2,000. These $300 can then generally be put towards the tax deduction. So that's good. That's better than, I guess, not being able to apply any of it.
That's important information. I didn't know that. So yeah, thanks
great.
for sharing.
Thanks, Samantha. Do you want to do a knowledge drop at some point, Samantha? You got all this knowledge too. Cool. Awesome. So yeah, that's actually, because, over 12 months, that definitely adds up, like the 300 times the 12 months. So that's great to know. What else do we have here? So then Kara has a question, I think, just to clarify from the FEIE. So if you start in May, your same year taxes can include the 330 days, or is it specific to the following year? Like, how exactly does that rolling date work, basically? She just wants to make sure it's not like the calendar year. It's
Sorry, I'm looking. Yeah, it's a rolling 360 days. So if your remote year starts in May, your 365-day period can start May 1st.
So say you start May 2016, would you try to apply for the FEIE for 2017 then? And just tell them which 360 days you were gone for 330 of? Because that's confusing me too. Like, which calendar year?
Yeah, you have to wait until you meet the requirements. So it wouldn't necessarily. There are also two ways that you can, if you are a W-2 employee or working for yourself, there are two ways that you can look at the earned income exclusion. One is you can take advantage of it right away, and this is more applicable if you're a W-2 employee. You can fill out the paperwork and choose not to pay your taxes up front as you go.
Yeah.
Or the more conservative route is you can wait and then get a really, really nice tax refund at the end of the year.
It's always nice to get that.
Yeah.
Cool.
Yeah.
Kara says, okay, great. That answers the question. Thank you. Thank you, Kara. Awesome. I think, we have another question coming in. Is there any way to qualify for the foreign earned income credit as self-employed or 1099, or do you have to be getting a W-2? Or is that still kind of gray area as well?
So whatever income taxes you are paying qualify, but not self-employment tax.
Does that answer that, Candy? So you have to be, you have to be getting paid. You can't be paying yourself, basically? Yeah. Okay. All right, yeah, that makes sense, I guess.
And Candy, we can, if you want to chat more about that later. Or I know one of the questions was about there was something around maybe more hidden or unexpected can deduct as a someone working for yourself. Let me put together maybe a list of some, not hard and fast things, but things you might want to consider, and I can post that later.
Awesome. And that's actually a great segue to kind of wrapping this up. You're happy if anybody reaches out to you, Jamie, in the future, like on Slack or whatever, if they have questions about this stuff?
Yeah, cool. Please feel free. Again, on the FEIE stuff, I've learned about this as I've gone along, being a remote. So I certainly don't consider myself an expert, which is one of the reasons why I put Josh's information on there. So, happy to answer some high level questions, but definitely consider reaching out, especially if you're thinking about having someone do your taxes. Great resource. The fee is pretty reasonable, spot on with other preparers. So no reason not to reach out there.
Excellent. All right, cool. And with that, I'll just say thanks again, Jamie. You are awesome and super knowledgeable about this stuff, and kind of like a resource for the whole nation when it comes to doing your taxes correctly, which is something I stress about. I'm like that girl you showed at the beginning of your presentation. I feel like that every time tax season comes around. Freaks me out. But thanks again. I feel better already about it, so appreciate it. And thank you guys to everybody who joined. Again, this will be in the Knowledge Drop archive for people to watch or for you to share with anybody that you think it might benefit. Feel free to share Jamie's knowledge with them as well. And we'll see you guys next week. Actually, we're going to have a Knowledge Drop, just 1 week from today with Mike Raven from Ikigai. So keep your eyes peeled in the Knowledge Drop Slack channel for information about that and for all Knowledge Drops coming in the future. And I'll stop recording there. Thanks again, guys. Ciao.